Hello all, and welcome to a special edition of Real Day Trading. This is the first day of the 5K challenge. I have the account up here and we will go through the positions I took and give a little color as to why. Let's start here. First, I took a call debit spread on Tesla, 9:15 to 9:30. I took that spread and let's see, how much did I get for that? How much did I pay? Cost me, here, let's see, $6.03. I did one contract. Now let's take a quick look at Tesla and see why I did that. Well, pretty clear. Tesla is now above my CDS target, and at this pace, I will get the full credit for that, which will be a total of around $900. So how does that work out? You go 9:15 to 9:30, it's a $15 spread. It cost me $6 to get that spread. At the end, if it finishes above 9:30, the spread is worth $15. Minus the $6 I paid for it, $900 in profit. That looks like a winner to start off. Okay. Next one. We are, and this is the total here. You can see we're up 100 and, it's going to keep going up and down. Coke. I did the $62 lotto calls. I wanted to get a lotto call in here because they, when you don't have much money left, I had like $200-300, they're an easy way to really jolt your account without much risk, as long as the lotto calls are reasonable. So let's take a look at the lotto call that I did. I did here, let's go to Coke. Why did I choose Coke? Look at that breakout right there. See that? There is the resistance line right here. Put that in. And Coke has gone right through it without even hesitating. All the way over here. So you can see Coke is now at an all-time high, and when stocks do that, they tend to keep going. Why? Because there are no bag holders up here. No one up here is holding Coke at $63, $64 and trying to sell it because they've been on the losing end of that trade for a long time. There's no reason to sell Coke here. It's going up, it's strong. It has earnings coming up on 2/10. It's surging into earnings as it historically does. So I decided to get the $62 calls for 12 cents. Those are now worth 16 cents. That right there is a 33% return. So if I had day trades, for example, that I could use, right off the bat, that would have been a 33% return in around 30 minutes. That's a pretty good deal right there. Okay. HON would be the next one. Let's take a look here. HON, I did a 195, 190 put debit spread. Why? Well, obviously, look at that reaction to earnings there. Only a little bit of a bounce, not much, and then it starts to pull back down again. You could see here on the chart, here is the gap, right? Now, right there is the gap for HON, right around, let's see, what is this here? This is 193.42. I expect HON to continue to challenge this gap right here. Right there. If it breaks through it, it's just going to plummet, right? It's going to go straight down and fill the gap. That gives us full credit on our spread. Great. That's what we're looking for. If it doesn't, then I know tomorrow to get out of the position. So it's kind of low risk because there's not going to be much of a bounce here. You're not going to see HON jump up because earnings were not good. I mean, earnings were fine. Guidance sucked. And when guidance sucks, there's not going to be any buying pressure for a big bounce. So it either breaks through or I take a small loss on it. I like that return on this trade. So HON, great. Etsy. I took Etsy here and I did a 129, 125 put debit spread. By the way, on HON, I got that for $1.35, and that means I have $3.65 potential profit. Again, put debit spread 195 to 190. If it falls below 190, that is a $5 credit for me, and minus the 135 I paid, so that's $1.65. Sorry, that's a $3.65 return on that. I did 3 contracts, so you're looking there at a potential $1,095 in profit. Okay, well, if it breaks through, I get $1,095 in profit because it's going to completely break through and drop all the way down. If it doesn't break through, I'm looking at, maybe I buy it back for $1. I'm looking at maybe $110, $100 loss on that position. So $100 loss on the position. If it doesn't break through, $1,100 gain. If it does, I'm going to take those odds. All right. Moving on to the next position here. We are looking at Etsy, right? I did a 129, 125, 129, 125 on Etsy, put debit spread, and for that, I got $1.61, so it's a $4 spread, right? $2.39 potential profit, $1.61 potential loss. I did 3 contracts. Here you see Etsy on the daily chart broke down below support here. Broke below support, no strength against the market, slight little bounce going on here, but nothing much. Etsy will most likely, I feel good about this trade here. It has broken through several areas of support and it continues to drop. Earnings is not until February 24th. Plus, when you have a number of bullish positions like I have, I wanted to make sure, sorry, I should probably switch this over here to Etsy so you can see my mistake. Etsy here broke through support right here, gap down below it, and this is why I took this short. So I also wanted to make sure I had, if you see here, enough bearish positions to balance out my portfolio. I know that we gapped down, but we're starting to fill up that gap on SPY right now, so I wanted to make sure we had some bearish positions. All right, the one risky trade I took, but I liked it because of the parity, and explain that in a second. CFVI, Jesus. Okay, CFVI here. Well, look at the daily chart. Obviously gapped all the way up to here, and then now it's retreating back, but it broke above minor resistance right here. What I liked about the trade, which right now is against me, granted, is I got it for $2.55 and it was a $10 call. Expires 2/18. When I got it, it was roughly at around $12.53. Well, that is, I'm paying no premium for that. It's almost pure intrinsic value at that point. So this is sort of like just buying the stock itself, but being able to do it with options because it's going matching penny for penny almost with the stock. In fact, right now it's worth $2.20 and it is at $12.10. So 10-cent differential at the moment. It's down right now, but this one has some time to February 18th. I don't think I think as long as it stays above this 50-day moving average, this position will be fine. Now to the complicated one of the day, Amazon. That's why, by the way, this balance is going to just fluctuate back and forth and back and forth. Amazon, I did a bracketed butterfly. Now, this is a trade that I have come up with. Can't find it anywhere else online that anyone else is doing this. So, bracketed butterflies, I'll just tag my name onto it. Seldom play. Basically, what it is I am saying, on the one hand, Amazon can go up to 3,000, right? And that's $170 above where it is as a midpoint. And I got that for $2. If it goes up to 3,000 and the spread is 29.60, 3,030.40, basically it's a $40 differential. Let's say it hits 3,000, though the 30.40 calls are worthless. The 3,000 calls are worthless, but the 29.60 calls are worth $40. I paid $2 for the spread. That's a $38 profit, right? So that's 19 to 1 I'm getting on that call spread. Earnings are good. They announce a split. It goes up to 3,000 tomorrow. 19 to 1 for $2 debit. Great. But what if it goes down? So I bracketed the other side on the put side. 2,700, 26.60, 27.40. Another $40 spread. This one costs $3. So the whole thing costs $5, right? Again, it goes down to 2,700. Well, then the 26.40s are worthless. The 2,700s are worthless. But the 27.40 puts are now worth $40. Again, $40 minus the $3 I paid, $37 profit. So right there, that's a 12.3 to 1 return. Either way it goes, as long, if it hits it's either 2,700 or 3,000, a $300 range there, of which it's directly in the middle at the moment for a stock that's about to have options. That to me is a really good chance to take, because it's either going to go in one direction or the other. And even if it doesn't hit exactly, I will get something out of either the call side or the put side. So even if it goes way above and it hits, 3,100, I'll be able to sell the call butterfly tomorrow morning for, I don't know, $1.50, reducing my entire exposure to 350. So even my downside on this trade is not too great. I'm not too worried about it. ABBV, I jumped out yesterday when they had news, and that turned out that it quickly reversed. I still think jumping out was the right play. When you see a dip like that, I do not want to stick around to see what the reaction to investors are. You can never truly interpret news to figure out what investors are thinking or not thinking, because it's all algo driven. That could have tanked much, much more than it did. But right now, you can see Brief bust out to an all-time high today, and I am going to ride that. I got the 137 calls. They expire next week. I got them for $4. Right now, we're at 141, and it continues to go up. Even with the market dropping, look at that relative strength there on ABBV, right? It is really strong. So that is also currently in profit by around $140. Finally, our old friend Apple. I took the 172.50 calls, but I put them all the way out to February 18th to give this trade some time, because right now Apple's going to go back and forth with the market, wait for things to settle down. But you see all this green here? Apple has been relatively strong. Oh, you don't see all the green there because I got to put this on. Apple, there it is. All the green here. Apple has been relatively strong almost the entire run of this week, even though it doesn't seem like it and it's bouncing around. It's slowly creeping up. And you can go here and see Apple. Look at this. Look at this bull flag right here. Really nice bull flag. All we need is a market breakout and Apple will take off. I'm giving it 2 weeks on that. So I'm pretty confident that Apple is going to pay off here. This is the most expensive trade I have because I bought 2 of them at an average of $5.50. So it cost $1,100 for this trade. So I currently have $144 left. I'll probably grab some lotto call with that to finish out the day. Not going to really use any day trades unless I really see a good reason for it. For example, let's say CFVI jumps up to $15. Okay, I'll use a day trade on that. But beyond that, I'm going to keep my day trades as secure as possible so I can use them when they really matter. That is the update. You can see we're pretty much exactly even. We're just going to oscillate around there until one of these break out. The market's currently dropping, but it is in very choppy mode, so we will see how the day pans out. But those are our positions on the first day of the 5K challenge. Thank you. And I almost forgot to say, so many questions are coming in. Really hard to trade when answering a million questions, number one. But number two, most of those questions, almost all of them, pretty much, yes, all of them, are answered in the wiki. So please, for the love of God, do everyone a favor. Read the damn wiki. Thank you. Have a good day.